Alright guys, welcome back to class. In this particular section of the video, we are going to be talking about how to set up sales tax, which is VAT, GST, whatever name you call it, and how to set up sales tax. Now, sales tax is a compulsory taxation. It's a compulsory tax imposed by the government on the sales of goods and services. It is typically a percentage of purchases price, and it is added to the final cost. The tax rate varies by location, with different states and localities having their own rate. In the United States, sales tax is not a federal tax but rather a state local tax. But in Nigeria, it is a federal tax. So depending on what sales tax is or which agency is responsible for your sales tax generally means the same thing all over, but depending on how the tax law is regulated in your own locality. So we're going to look at how to set up sales tax. Normally, I would like to do this one I would like to do inventory, or some people would like to do inventory first before doing sales tax, but I like setting up my first and sales tax first, so that once I'm setting up my inventory, I will know that all I need to do is to apply the sales tax code, then it will start calculating immediately. So there are key things to take note of when you are setting up sales tax in QuickBooks especially. Now, it may interest you to know that we have what is called that's tax inclusive and tax exclusive. Now, what does it mean? When you say tax inclusive, that means in your selling price of that product, tax is included. While if it says tax exclusive, that means in your selling price of that product, tax is excluded. So when you are applying, QuickBooks will now add the sales tax, and you should not add the sales tax on that, and to now give you the total. But if you say your sales tax, that tax is inclusive, and you still apply tax and tax rate on it, now you are charging double. You are doing double taxation. You are charging double tax on that particular product, which is something you should pay close attention to. Now, I will show you exactly what I mean when we start the practical aspect of this. But I just want you to take note that there is difference between sales tax inclusive or tax inclusive and tax exclusive. Tax inclusive means that tax is already included in the selling price of that product, while exclusive means that tax is not included. So when you're setting your tax, you have to bear these two things in mind. Are you charging the total price you are charging for your product? Is it tax inclusive or is it exclusive, so that you will not charge people double, or people will not say that you are selling the price of your products or the price of your services are very, very high. So you have to pay attention to that one as well. So let's go right into QuickBooks and do it as we go. So before you set up anything in QuickBooks, if you want to do any setting in QuickBooks at all, any setting that has to do with, let me just call it administrative settings, the only place you can do that is to come to your edit and come to your preferences. So when you click on preferences, what do you want to do? This is where you're going to see the options to select what you want to do. So if you look at this, what we did earlier on was under accounting, and under the account is under company preferences, which is the setting up of the account numbers we use on the chart of account. So now what we want to do, we want to set up the sales tax. Now, to set up your sales tax, you come to where you are seeing sales tax. If you click sales tax, you click on some company preferences. Remember that when we were creating our company file, we told QuickBooks that yes, we charge sales tax. That is why this one is tick. Otherwise, you wouldn't have seen it tick like that. It would be no. But because we charge sales tax, that's it. What we are seeing. So now this is where we're going to add up our sales tax item. We are going to set up our sales tax code. But let's do something first. Now look at here. If you look at under this place, you see when do you owe sales tax? Now, because we are dealing with accrual basis of accounting, everything we are going to be doing is going to be under accrual basis. So, and because we have already selected accrual basis of accounting earlier on, that is why we have this as also checked. Now, we charge sales tax as we send invoice to customers immediately. That is why you see this one as of invoice date. That is immediately the invoice is raised, we are charging sales tax. So QuickBooks now start tracking our sales tax immediately. So that is what this thing does for us. Now, when do we pay those sales tax? When do we pay? Because sales tax is not included. The taxes you collected on sales tax or VAT or GST are not supposed to be included in your revenue. They are not supposed to be included in your revenue. Those things are payment you collected on behalf of the government, so you need to remit them back. They doesn't form part of your revenue. So you select now, depending on how you pay your sales tax, you pay your taxes. Do you pay monthly? Do you pay quarterly? Do you pay annually? So we pay monthly. So you select monthly. That is when we pay sales tax. I think generally sales tax are paid monthly. Generally, sales tax are paid monthly. These are returns you have to file every month. Now, the next thing we're going to look at is the code. So what is the sales code? Now, if you look at here, we have taxable items. Taxable item, that means taxable item should be identified by tax. But you can decide to change it, right? You can decide to change this. Now let's say, because here in Nigeria we do on VAT, we say value added tax. So I'll change the name to VAT, or I will now put the two, VAT and GST. I'll put VAT/GST, which is basically the one Indians use. So if you click on this add new sales tax code, I'll say VAT. Now you can say sales tax. You can say sales tax. I can also say equal GST. Now you can see, because this is a vatable item code, so I'll just click vatable item. I'll click OK. Now you can see that the code has been applied here. Now non-vatable item, I can just choose to leave this as non-vatable item, or I can just because you may have products that are VAT exempted and you don't want to sell such kind of goods, or you render such kind of services, you don't want QuickBooks to automatically apply the VAT rate on it, so you can just click. But this one, we can choose to leave this one as non-vatable item. We just leave it as non-tax. That means there's no any tax code that will be applied to it. So once you're done setting up your sales tax code, the next thing you're going to do is to set up your the tax rate. Now all these things is just the code. We have not set up the rate yet, so we now come here, access tax item. So you access tax item. Now you can see where you have most common sales tax item. We don't have anything yet. You can just click here. To add it. But here you can set the sales tax item. Now because it's a sales tax item, I'll just click sales tax item. Now what is the sales tax name? We have like I said, we have VAT. You can just say GST too. VAT/GST. I'm adding the GST because of the people who are watching from other places. You can call it whatever you need to, whatever you call it in your location. So here we call it value added tax. When people call it general tax, or general whatever. So whatever name you call your sales tax, this is the same way you set it. So you now set it. The description is sales tax. What is the percentage? Now the percentage here in Nigeria is 7.5. Your own will be 10, your own will be 15, some will be whatever rate. So our own here is 7.5. So what agency do you pay those sales tax to? In Nigeria here, the people that are responsible for our sales tax are referred to Federal Inland Revenue Service. So we have Federal Inland Revenue Service, also refers to as FIRS. So you can put let me copy this and just paste it here. FIRS. These are the people we pay this sales tax item to, sales tax collected to. So you can put the details, other details that you think are necessary. Otherwise, you can just say okay. So we have selected that. We have done with that. We have selected. Now what we did is we selected a sales tax item. Now we gave it a name, which is VAT, value added tax, GST, and the description is sales tax. The percentage is 7.5. Your own may be 10. Your own may be any percentage. Now the agency responsible for sales tax, collection of sales tax in Nigeria, is federal. Remember when I started, I said sales tax is in Nigeria, it is a federal tax. In other states, like the United States, it's a state tax. It's not a federal tax. But in your own locality, you just have to find out who is responsible for your sales tax. So here in Nigeria, it's called the Federal Inland Revenue Service are responsible for the collection of value-added tax. So that is where we have them. I put the name here. So once you're done, you just click OK. So when you click OK, now we have already added a sales tax item. What you need to do here is to come back here. If you come to your most commonly used tax item, now if you click on it, you will see the sales tax item we just added. So you just click on it so that it will be on default on all your products, on all your product that you're selling. You see it. So once you're done with that, you now click OK. So that means you have saved it. So any item you are selling, any item you are, then automatically QuickBooks is going to apply that. Now let me show you what I mean. So if you come to create invoice, you can create your invoice. We are still going to talk about that in details, but let me just, for the purpose of this example, let me just create a sample invoice here for you so that you see. So if you click on create invoice, now if you click on create invoice, select the name of the customer. Remember that this customer was created initially. Remember I told you that I created this customer on the background thinking that my screen was recording, but my screen was not recording. But I will still show you in the capstone project how to create customers and how we are going to do this thing. We're going to do a complete project, so that shouldn't be a problem. So select the customer you want to invoice. So select the quantity, let's say is 1. Select the item. Let's say this is the item. So you can see QuickBooks automatically assign the sales tax code for the customer to this line unless you change it. Now, because why are you seeing this? You are seeing this because when I created this customer and the inventory item, I did not apply sales tax on that. So that's why QuickBooks is showing you this. It's not trying to inform you that it will add this item, it will add this value, it will add the tax rate into this total value of the item. It will capture the value so that it will now calculate the VAT. So that is what Quick is trying to inform you. So when you click OK. So when you look at it here, you see that QuickBooks has actually applied this sales tax rate. I don't know this one it applies. I don't know which one is that, but this is the tax rate I want it to apply actually. So even though it's still the same rate, the same quantity, like QuickBooks has automatically calculated that. So this is my VAT. Now this VAT item, this is my VAT. You can see if you look at the total here, if you look at where you're seeing tax, the price per each is 2,000. The total amount, because it's 1, is let me just make it 2. Let me say 2. Now the total amount is 4,000. Now you can see the total VAT or sales tax or tax amount is 300, which is 7.5% of 4,000. It has added it. Now, what is this thing trying to tell you? Remember when I said we have VAT exclusive and VAT inclusive? What this is trying to say, in our selling price, it is VAT exclusive. So that means whatever selling price we have, QuickBooks is going to add 7.5% to it to give us the total selling price. So that is what we are going to charge. We are going to charge the customer. We're going to charge the customer 4,300. Now, if this selling price is VAT inclusive, all you need to do is to click non-VATable. Now it will give you exactly the same amount you are selling it. So that means QuickBooks won't be able to track this sales tax item. QuickBooks won't be able to track this item because what you did here, you are telling QuickBooks that no, QuickBooks don't capture VAT on this item. So QuickBooks will not track the VAT. But because we want to be reporting our VAT accurately, so what we need to do is One is either you set up your sales tax using an exclusive, saying that okay, the selling price is exclusive, so that you know that whatever is on top of that is your VAT, or you now set it in a way that you now minus this 300 again from this, which is going to be 1,700 as your which is going to be 3,700 as your selling price. Then 300 now will be added as well. But it either way you want to do it is going to give you the same thing. But the purpose of setting up your VAT sales tax is to make sure that you track your sales tax separately from your revenue. So what do I mean? Now I will save this. If I save this, you can ignore this. If I save this now, I'll go to my chart of account. Don't worry, you can just, when you're doing that, you just uncheck the email. So if I go to my chart of account here now, if I go to my chart of account, you see my reported revenue. My reported revenue here, you can see what I'm trying to say. My reported revenue here is 4,000. But what is the invoice value? Let's go back again and see. What is the invoice value? The invoice value for this transaction is 4,300. That is the invoice value. But my reported revenue here is 4,000. What does that mean? Where is the 300? Now the 300 is automatically tracked as payables. It is not included in our revenue because it is not our money. It is something we collected on behalf of the government. So if you go back to your chart of account, you now see under your sales tax payables, you know that 300 naira that 300 naira is captured separately as amount you need to remit to the government, which is Federal Inland Revenue. That is why it is necessary to always track your sales tax so that you know how much you're paying as sales tax. Then later I'm also going to show you how to adjust sales tax, maybe because we have the input VAT and we have the output VAT. So what it means is that input, that's the total cost of the item you're buying. When you purchase those items, the person that sold those items to you charge you for it, charge you VAT or charge you sales tax, charge you tax on those items you purchase. So that is what we refer to as the input VAT. Now when you are now selling out, that's output. When you are selling out, you have to charge VAT also. That means you are charging VAT twice on the item, right? Because you paid for that VAT and you are charging VAT. So you have to less, because you are not the final consumer of that item. You are not supposed to pay VAT on it. It's the final consumer that will bear the burden of that tax. So that is what, when you are trying to, before you remit your taxes to the government, what you need to do, you have to minus the one you paid, minus the VAT or the tax you pay, because the inventory you receive, the person that sold them to you will send you a bill, which that bill will include the VAT. He doesn't care whether you are selling or you are the final consumer. All he knows is that he sold to you. But because you are not the final consumer, what you need to do now is to remove the VAT you collected. You remove the VAT you paid on that item. You don't bear the burden if you're selling the item. You don't bear the burden of that VAT if you're the one selling the item, if you're selling the item. But if you're consuming the item, now you bear the burden of that tax. Let me explain. Let's take, for instance, you purchase a bottle water, one bottle water that you want to drink. Now the person selling to you we charge you VAT on it, but because you are not selling it, you consume it, the burden of that tax fall on you. But if you are selling, or if you are reselling that bottled water to another person, definitely you charge the person that you're selling it to higher. Yes, you charge the person you're selling it to higher, so that you also make profit. So that higher amount that you're paying, now you now less the one you paid, you less the VAT you paid. You now less 7.5% of the VAT you paid from the bottled water. Then from the VAT you're going to collect from the customer you're selling to, when you less it, whatever balance that remains, that is what you're paying to the government. So that is where managing your sales tax comes in. So in this managing your sales tax, that is where you're going to do adjustments. Yeah, that is where you're going to do adjustment. Now you can see, if you click here now, you see these are the sales tax items listing we have here. We have 7.5%, which you're going to. The agency response is Federal Inland Revenue Service, which you already know. So you can see open sales tax code list. All these things are just those things. Now here also you can adjust the dates of your payment. Now here we say, let's say here our sales tax payment is always, I think, 7th and 10th of every month. So 10th of every month, you set the date. That's the date you're supposed to pay. Who are you paying to? Federal Inland Revenue Service. Now adjustment account, which account are you adjusting it to? Is it going to be an increase or decrease? Now let me open my calculator. Very quick. Very quick. Where is it? All right, this is my calculator, and this is my calculator app. I want to show you something practical. I want to do practical so that you will not be confused when you're doing all these things. Now let's say we have 4,000, right? 4,000 as our selling price, and we charge 7.5% times 7.5 over 100. This is 300 naira. Now this is our VAT. This is the tax we are supposed to pay the federal government, right? Now let's go back. Let me close this one first. Let's go back to our inventory. Now let's go to this item. I want to check the cost price of those items. Now the cost price for the item we sold is the cost price for the item is sold is 1,820. Okay, so 1,820. It is assumed that this 1,820 is VAT included. Is VAT included? 1,820 is VAT included. So we are going to now say, okay, what is the VAT rate paid on this item? Now, because it is VAT, because this 1,820 is VAT inclusive. So what you're going to do now, you're going to divide this amount. You're going to divide 1,800 to get the value, of the amount that was charged as VAT. So you're going to do this amount divided by 100.5. It's going to be that 7.5% plus the 100. We are going to divide by 107.5% of that. So when you divide it, you will now realize that, okay, this is what was charged as VAT on that, 16.93. Now 16.93, we have two items, right? 16.93. Let me be sure of what I'm doing, please.